Hey, so did you see what happened with the stock market today? It was kind of wild, right?
Oh, yeah, I did. I saw something about a big crash. What exactly went down? It seemed kind of scary.
Yeah, it was pretty significant. Like the Sensex dropped over 950 points and the Nifty went below 24000. I mean, that's a big drop.
Wow, that's a lot. So, what was the main cause, do you know? Like, what triggered such a huge fall?
Well, it seems like the main thing was the US Federal Reserve, the Fed. They basically said they're planning fewer interest rate cuts next year than what everyone was expecting.
Okay, so fewer rate cuts. Gotcha. And that spooked everyone? How does that even work? I mean, why would that make the market crash?
Right. So it's like this, when the Fed cuts interest rates, it generally makes things better for emerging markets like India. It encourages foreign investment because it makes borrowing cheaper. So when they say fewer cuts, it's like less money flowing in.
Ah, okay, I see. So, less investment, that means people pull their money out and the market goes down. Makes sense. So, what else was going on? I mean, was it just the Fed?
Not just that, there were other things adding to it. The US dollar got stronger and the bond yields they rose as well.
Bond yields rising and a stronger dollar. Huh? I'm a bit confused. How does that affect things?
Well, so higher bond yields make US assets more attractive, right? So investors are more likely to pull their money out of places like India and invest in the US instead. And a stronger dollar makes foreign investment more expensive, which discourages it further.
Okay, so it's like a double whammy, more money going out and less money coming in. I get it. Makes sense why the market would react badly. Anything else?
Yeah, also, foreign investors have been selling a lot lately, like a lot. They've sold about 8,000 crore worth of holdings recently. And there's concern they might repeat a big sell off, like they did back in October.
Oh, wow. So they're pulling a lot of their investments out too? That's definitely not good. So, what kind of stocks were hit the hardest?
Well, IT stocks and metal stocks really took a hit. Like IT firms that make a lot of their money in the US, they closed down quite a bit. And metal stocks also dropped because of the stronger dollar.
Right. Okay. So, IT and metal, those were the big losers. It's all starting to connect now. It's like a perfect storm of bad news. Huh?
Yeah, pretty much. And also, global markets were down as well, Everything just seemed to contribute to the negative sentiment. It wasn't just India.
Yeah, I see. A global thing. Okay. So, just to recap, it was the Fed's fewer rate cuts, higher bond yields, a stronger dollar, foreign investors selling, and a general global downturn, right?
Yeah, exactly. You nailed it. All of that combined to make a pretty bad day for the market.
Okay, makes sense. Well, hopefully it's just temporary. It's kind of scary to see such a big drop. So, what's next? Any idea what to expect?
Well, some experts say it might be temporary, but others are saying we need to keep an eye on the 200-day moving average. It's sort of technical thing. If that gets breached, it could mean more falls.
Oh, okay, so more uncertainty, it sounds like. Well, thanks for explaining all of that. It was really helpful.
Sure, no problem. It's good to keep up with these things, Let's just see what happens next.